Now, I'm sure I'm not the only one who's seen studies suggesting that dividend has actually accounted for a larger portion of investors' returns than actual price appreciation, thinking, is that even possible? You know, dividend is so boring and slow, but I think that's why many investors, myself included on this one, often overlook how powerful dividend can be. Now, this is the kind of study I'm referring to, and GFM Asset Study find that almost 75% of investors' return have come from dividend over the last 40 years. And a quick check with an S&P 500 calculator shows that, yep, it checks out. Investors have actually made more money from reinvested dividend than from capital appreciation itself, almost 2/3. But how can this be the case when most dividend ETFs and dividend paying stocks only pay between 1 to 3% and the average yield for the S&P 500 is below 2%? Well, you see, over the years, companies have been able to maintain or even increase the yield, so the dividend yield, while prices have been going up, increasing the actual dollar amount investors are getting paid. And besides, dividend is paid no matter what, regardless up and down swings. So while growth investors get crushed and valuations crater, dividend is still being paid. In fact, when prices go down, yield goes up. So you can actually make more money relatively during downturns. But dividend investing is not as simple as going out there and just finding the highest possible yielding stock or REIT ETF and then living off the payments, since that will get you nowhere. So here's an example with an S&P 500 ETF paying just about 2% yield. And after 30 years, you're actually going to see a 4,000% return from dividend alone without being reinvested, and an aggregate yield of 38% after those 30 years, which means you're getting paid 38% of your initial investment each year by year 30, and 5.7% after 10 years. So the yield has almost tripled after 10 years when it's only growing at 10% in terms of price appreciation. And besides, you don't even need 2%. Some growth stocks actually pay a dividend as well. And although it might be tiny, like Domino's Pizza's 0.8 or Activision Blizzard's 0.5, don't be fooled, because one of the most important things about dividend is dividend growth. So the ability to maintain the yield while prices go up, which will give you a relatively higher return. So bear with me here. Here's an example of these growth stocks growing at 20% each year, which is quite realistic for a growth stock, but they're maintaining their yield of 0.5% and 0.8%. And after 20 years, we can see that they both have more than paid you 100% from dividend alone. So Activision Blizzard 130, Domino's 210. So even with a seemingly insignificant yield below 1%, you can make a lot of money if the yield stays flat while prices go up, because dividend is paid on a percentage basis, so the gains are all relative, right? But realistically, most high yielding stocks probably sit right around 3% at the cost of some growth. So let's turn the annual appreciation down to 7% while keeping the yield steady at 3%. But still, you're looking at 120% return from dividend alone if reinvested, and a 34% boost to your overall gain with reinvested dividend. Now, these examples and all the other ones do not account for capital gains tax, mostly because it would be a nightmare for me to have to do it. So do keep that in mind, that these returns will realistically be slightly lower. But you can see how just after 20 years in a slow moving stock, reinvested dividend boosts your performance by 1/3. Now, accumulative growth never ceases to amaze me, and how powerful it can be in the long run, just by even if we're looking at tiny numbers. And I hope this video serves as a reminder Not to forget about the boring, dull investments that are not making headlines. So sure, you've got the Teslas and Amazons and Neos and EV SPACs of the world, but even those kind of growth stocks can't catch up to patient and prudent investors who have been letting dividend and accumulative growth do the work for decades. That said, dividend investing is not as simple as going out there and putting all your money in the highest possible yielding stock or REIT ETF and then thinking you're going to get a bigger and bigger paycheck every quarter and living off that. That's going to get you nowhere. You still have to find okay companies growing at a decent pace, because a stagnant stock not growing can pay as much yield as it wants to. It's still going to fall behind all the growth stocks. So you still have to find quality companies that are able to maintain the yield or even grow it over time. So finding companies potentially able to grow their dividend is a whole nother video. So there's definitely a balance here between yield and the possibility of growing the dividend payouts. And if investing was as easy as finding 5 or 10% yield investments, everyone would be pouring into AT&T and REIT ETFs. So some dividend food for thought here. And after all, as Kevin O'Leary keeps harping on about, an investment not paying a dividend is by definition a speculation. And I guess I have to agree with him. I mean, with growth stocks, you're just hoping someone else wants to buy the stock and someday in 30 years you can sell it for a profit and pay massive taxes. So there's definitely a chance to take if you go with growth stocks compared to dividend. And I myself only hold 3 stocks paying a dividend, namely Microsoft, Activision Blizzard and Xterra Energy, and neither of them pays more than 2%. But they have been able to maintain the yield, and besides, I'm not really looking for dividend. But after making a video like this, I might have to scoop up some more shares of those the next time I'm buying, because this really makes me want to have a higher yield in my portfolio, and it makes me appreciate what dividend can do in the long run. It's easy to get lost on you because you just look at the gains and you see massive green numbers, and all these growth stocks like Tesla and Amazon, they're up like 1,000%, but the percentage gain doesn't account for dividend or reinvested dividend. So you sort of have to keep it in the back of your mind and maybe even keep track of the dividend you've been receiving from an investment in order to evaluate how well it's actually been doing. That's it. Give me topics for other videos. This is all I had on the power of dividend. Thanks so much for watching. Hope I'll see you in my next one. Take care.